Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this channel, we look at great dividend companies that you possibly would invest on. So if that's something you're interested and you want to learn about dividend investing, hit that like button, hit that subscribe button. Don't forget to hit the notification bell. With that said, in this video, we are going to look at a company that not many people talk about. It is a company that has been giving great dividends for the past 39 years. So hope you like this video. Sit back, enjoy. Let's check out this company. So the company that I'm talking about is called Sonoco Products Company. The ticker symbol is SON. And basically, it is a company that manufactures and sells industrial and consumer packaging products in North America, South America, Europe, Asia, and Australia. So if you go to their website, you can see a little bit more of the types of products they do. So they do like consumer packaging, industrial products, protective packaging, healthcare packaging. So they do like plastic trays, molded foam, and it's been, this company has been in business, founded in 1899. So they've been doing this for a long time. Let's take a look at the dividends. So looking at Simply Safe Dividend, based on their dividend safety rating, they rate this as 69, which is safe. For those of you that are wondering, the dividend yield is 3.0. Market cap is 6 billion, so it is a mid cap. At the time of this video, it is at $65. Looking down through some of the key metrics, you can see payout ratio is about 34. During the recession, they've maintained their dividend. So looking at the dividend growth, you can see that the latest 8%, which is fast. Last 5 years is about 4%, which was slow. If you look at the last 20 years, 4% is slow. So this is one of those dividend companies that are pretty boring. But if you look at the product of this one and the way it's been performing, dividend growth streak of 39 years consecutively, uninterrupted for 39 years without a reduction. So if you look at the map, it's just solid, consistent, going steady upward trend. Looking at some of the payment details, you can see for quarterly you get paid March, June, September, and December. The annual payout is $1.96 per share, which is coming out about like 49 cents per quarter. Now if we look at some of the key metrics and stuff, you can see it looks reasonably valued. Now looking at the sector PE ratio, you can see it's at 11, materials is at 14. Going down some more to their, you can see that total sales is at billion, about 6.54. Return on invested capital, so you can see the last 12 months 13%. Return on equity 23%. So I'm not sure. They did have in 2021. They did have a negative, return on equity, but then after that, it's pretty solid. Now, if we go to some of the articles, so this was dated on 8/12/2022. Top stock Sonoco packs impressive growth. Tops buy point. So. Take a look at this one. It is investor.com. In it, they talked about how it's been performing. So Sonoco reports record quarterly results, raising full year guidance. Looking a little bit more toward this one, it talks about how the technicals. Take a good look at it. See what you also think about. Now, if we go to tip ranks, based on their analysis, stock analysis, they rate this as a smart score, which is 6 is neutral. You can get a little bit more information here. Insider trading, they have sold shares. You got hedge fund holdings have decreased. Very positive is the retail investment. Now, if we click on the analysis forecast, you can see the rating is a hold based on 7, 1 buy, 5 hold, and 1 sell. The 68 is the target price with a 4% upside. 12 months forecast rated as a high of 76, an average of 68, and then a low of 64. Now, if we go a little bit more to some of the analysis forecasts, you can see it's a mixture of a holds, sells, and buys. So moving along now to Yahoo Finance. Now, if we look to the comparison of the S&P 500, you can see the S&P 500 is the blue, and then you got your SON, which is this one right here. So you can see S&P 500 for the year has been doing much better, but then it shifted to now you can see it's slightly beating it. Now, if we go to the 5-year one, you can see that S&P 500 still tops it. So that's just something for you to consider. Now, if we swing by to more information on the Yahoo Finance, you can see top institutional holdings. You can see BlackRock has about 10 million shares. Vanguard has about 10 million, and you got and all these other Invesco. Okay. Now, let's swing to Webull. Based on their analysis, there was 11 of them they rated as a hold. You can see a hold of 81%, and then underperformance 9%, and then strong buys 9%. So just to let you know that Webull is doing get up to 12 free stocks now when you open and fund a new account. So if you want to use Webull as your platform, my link is in the description. Go check it out. Now, moving along the price target, you can see at the high of 76, the average of 67, and at the low of 64, and then you got your institutional holdings over here with increase of 135, decrease of 142, then new of 58, and sold out of 53. Now let's swing to bar chart. Based on their price target, a high of also 76, mean of 66, and then a low of 60. Their analysis rating is based on 3 months. It's pretty much steady as a hold. You can see currently there's 6 of them, 1 sell, 1 strong buy, 4 holds. All right, now moving along to Simply Wall Street. Based on their valuation, they rated as 73 undervalued. So currently at the time of this video it's 65. Their fair value rated as 246. And how they use that? They use it's right here. For this estimate, we use a discounted cash flow model. Now, if we look down over here, below fair value, significantly below flyers, and more than 20%. All right, guys. Also, check me out on Instagram. Same thing, Mr. Dividend Investor. Definitely, if you're on Instagram, look me up. All right, guys. That's it. What do I think about it? I think it's a solid dividend company. I wouldn't, in my opinion, I wouldn't put it as one of the major players. But if you're looking for a different company to possibly invest on and use as dividend company, that's something that you want to consider. However, for me, I think it's a solid company. But if I were going to buy something, I'll buy in a different dividend company. But it's a solid one in my opinion. So definitely continue to do your own research. Again, this is not financial advice. This is just me sharing. With that said, guys, thank you so much for watching. There are other videos as well if you want to look at other companies that I've researched and I looked at. All right, guys, stay cool, be safe, keep investing, and I'll catch you guys in the next video, right? Take care. Aloha.